Hey everyone, welcome back to Corporate Decoder. E.S. just filed an 8K announcing their Q1 2026 earnings, and I am seeing a continuation of a trend that might surprise you. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing confirms their latest financial results and gives us a peek at how they are performing, but the real story is in the underlying numbers and what they mean for their future. We are looking at Essex Property Trust Incorporated, or E.S.S, a real estate investment trust. They focus on owning and managing apartment buildings. Think of them as landlords to a lot of people in high demand areas. The company is reporting its financial results for the first 3 months of 2026. They issued a press release and provided some supplemental information that we are going to break down. This filing is primarily an announcement of their Q1 2026 earnings. They've put this information on their website and attached it as an exhibit to this report. What is important here is not just that they announced earnings, but what those earnings actually say about the company's health and its future prospects. This exhibit is the core of the filing. It contains the actual financial numbers. Since this is a real estate company, a key metric to watch is funds from operations, or FFO. This is a standard measure for real estate investment trusts, giving a clearer picture of their operating performance than traditional net income. Looking at the available context, one headline from MarketScreener.com on the 27th of April 2026 mentions that ES posted Q1 Core FFO of $4.06 versus an estimate of $4.05. This is a very tight beat, suggesting they met analyst expectations almost exactly. While beating expectations is good, a beat of just 1 cent might indicate that the business is performing right around where the market predicted. Let us dive into what that means. For a company like Essex Property Trust, consistent FFO growth is crucial. It allows them to pay dividends to shareholders, reinvest in their properties, and acquire new ones. A stable FFO around expectations suggests that their rental income is steady and their operational costs are well managed. While the filing itself does not contain detailed financial tables in the portion, I can access the supplemental information mentioned as Exhibit 99.1 would contain these crucial figures. Based on the news headlines, we know they are on track with their financial performance. This suggests that their strategy of operating apartment communities in desirable locations is continuing to yield predictable results. Consider that other headlines from the 28th of April 2026 from 10 Television and Guru Focus. Mention their Q1 earnings snapshot and a look at the stock after a 4.3% gain. This suggests the market is reacting positively, or at least neutrally, to these results. A small gain might indicate that the market was already expecting good news, or that the reported results, while solid, did not offer any major surprises to drive the stock higher. Let us think about the larger picture for Essex Property Trust. As a residential REIT, their success is tied to the health of the housing market, employment rates, and rental demand in their specific geographic areas, which are likely in the western United States given their headquarters. The fact that they are meeting FFO expectations suggests that demand for their apartments remains robust. Now, we need to consider the broader economic environment. Inflation and interest rates can significantly impact real estate companies. Higher interest rates make borrowing more expensive for debt-laden companies, and they can also make dividend paying stocks like REITs less attractive compared to bonds. However, the steady Q1 performance suggests that Essex Property Trust is navigating these challenges effectively, at least for now. When we look at institutional ownership, major players like Vanguard Group Incorporated, BlackRock Incorporated, and Cohen and Steers Incorporated hold significant stakes. This indicates confidence from large investors in the company's long-term strategy and its ability to generate stable returns. Their collective holdings suggest that the company is considered a solid, albeit perhaps not explosive growth investment. So, what is the story here? Essex Property Trust is demonstrating resilience and consistency in its operations. They are not necessarily blowing expectations out of the water, but they are reliably hitting their targets, which is often the mark of a well-managed, mature real estate company. The key takeaway is stability in a volatile market. That kind of predictability can be very valuable. What concerns me is how they might perform if economic conditions worsen significantly. While they are meeting expectations now, a sharp downturn in the economy could impact rental demand and push occupancy rates down. Also, the implied lack of significant upside surprise in the earnings might mean that growth opportunities are limited in the short term, or that the market is already priced in their stable outlook. The risk I am watching is any sign of softening rental demand in their core markets or an increase in operating costs that they cannot pass on to tenants. However, based on this filing, they appear to be doing a good job managing their portfolio. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. stay decoded. If this analysis was valuable, hitting that like button and subscribing helps us bring you more. Join our community on Discord, link in description.